Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, so as we get to about the halfway point in January, we've had we've had a couple of band rides, beginning of the month through the middle of the month. We're back inside the bands now. What we're seeing from the bulls is they're defending price, they're putting in higher lows. And if they can stay above this 38.05 area, which had been resistance early in the week, and they're trying to turn it into support now, then it's pretty likely this 38.24 half gets taken out. The price is actually open to be printed on my stuff. Let's go to the hourly chart. It's a little more descriptive. So we've had this whole consolidation period, and we're still in it. So you've had a couple of false starts to the downside, about 4 of them. They've all been bought. A couple of false moves to the upside here, tried to break out here, tried to break out last night. You can see where 38.05 had been the highs from Wednesday Globex, and it's tried to be support for the vast majority of this Globex. If that can hold, then you have a chance to go ahead and take out the Globex highs at 1775 and go to work on 24. What do the bears want to do? Well, you've been holding the hourly midband here. So keep holding it. Try to get back into something with a 37 on it and challenge yesterday's lows, which are down by the 9-day simple moving average. So it's basically been a consolidation tape. It's been tradable though. It was a nice short yesterday, and then once that got defended, once it started to turn. So yesterday morning in the regular session, we went down and we did 82.75, which it didn't shop for very long. It went down and did what it needed to do, and then it gave us a really nice long. So it was a short and a long, and we spent most of the day just in that long trade after being in the short trade. Tried a couple things into the close, didn't really work. We just wanted to chop, which is fine. But at that point, the day is well made by then. So today I'm going to kind of take the same tack. I want to see what 38.05 looks like. I want to see what the hourly midband looks like. See what the bears have. See if they keep printing these higher lows. And if they do, there's a point where we're going to just go ahead and start to bleed up. And if that's the case, then they're going to drag all these weak shorts with them that are going to keep trying to short all these highs and just basically spend the majority of their day getting squeezed. The other adjustment that we made, and there's a point where this won't work, and at the point where this stops working is the point where you might actually see a little bit more of a pullback than, say, 20 minutes. When these situations, when they bounce, when they hold them, when they bounce, when they can't do more, we've been going ahead and now at this point we're just aggressively taking profits on whatever we were in and getting into the other side. Once that stops working, once you start to see hard pushes down, bounces that become very shallow lower highs that then immediately get rejected to lower lows, that's what's going to scare the dip buyers out of the pool. That's when you get the deeper move. So that's the dynamic. If you want the deeper pullback, if you want to see the 9-day, if you want to go down to 37.38 and see the daily midband, that's the dynamic that is going to be the genesis of that type of tape. Until then, when they bounce them, they tend to bounce them and run them back to the highs. So, look, like I've always said, I don't care if we go up, I don't care if we go down, I just want it to move. And if all you care about is it moving, then you need to buy these dips aggressively until that trade stops working. Once the trade stops working, then you can ladder down into a short, and that short's going to run. And whatever paper cut you took trying to mess around with buying that particular dip versus all the other dips you bought versus it's just kind of it's the cost of doing business. It's a risk worth taking. And then once that risk reward shifts to the short side on a deeper move down, you can get more aggressive with that trade. So that's just what I'm seeing on the tape. So we'll see what we have. Keep an eye on 38.05. You got volume weighted average price coming in 38.11. 09 is the hourly midband. Our proprietary is also at 09. 5-minute mid is at 08. So, 3805 to 3811 is going to be important today. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.